welcome to our US briefing. So we have less than actually the US market just opened. So what we've seen so far today was a bit of a shift to the sentiment. So actually, let me just have a quick briefing for you in regards to what happened overnight. So we have seen the equity markets actually bouncing earlier today. However, we have faced a lot of losses overnight with Nasdaq, Dow, and even S&P 500 facing more than 5% losses. So that was mainly in regards to the COVID. So we have the worries of a second wave actually rising. So this is what actually changed the sentiment in the market, and that's why it could be actually a reason why we've seen dollar index closing like positive yesterday, bouncing away from 95 lows, and for the time being is a bit unchanged if we consider the open price and the current price. So it looks to be the bullish momentum looks to be a bit limited, but on the other side, it closed yesterday at 96.70 territory, close to that level. I'm not quite sure, to be honest. So, but that we'll look together once we shift to the MT4. So. The calendar today was a bit empty, so we have seen some significant data from UK, and more precisely, we have the the gross domestic, GDP number out of UK for April, manufacturing production as well. So let me share my calendar with you as well, so you can be on the same page with me. So as I was saying, just quickly shift to the Chrome tab calendar. Here we are. So you have already seen that, I assume. So we had a very dismal data out of UK earlier. So that's something that added a lot of pressure on the pound, other than the Brexit worries, other of course. That the dollar strength. So the reason why these data were quite important and added a lot of pressure on pound was mainly, let me take you back to me. Hello again. So as I was saying, the reason why this data boosted further to the downside pound and actually added a lot of pressure on the pound was due to the fact that first of all, we have seen that the outcome, the final reading was was higher than expected. So we have a clear contraction with a gross domestic product in UK for April. Remember that April is the lockdown period, right? So so as I was saying, gross domestic product hit a 20.4% drop. So clear contraction for the UK economy. Clearly, the economic activity slowed sharply for the second quarter of the year, and those data, so gross domestic product, manufacturing production, industrial production for UK for April actually clearly stated that UK can't really escape a deep recession this year. So that's why the following data, May and June, could be quite crucial for UK, because they will show us how deep the recession is, and the length of a potential of the recession. So this shows that the recovery is not really in front of us yet. What kind of recovery that would be? So similar to other economies, but yeah. So that added further pressure, as I said, to pound, and actually. Don't forget that a couple of things that actually adds pressure on the cable is, of course, the Brexit. And so on Monday, 50th of June, we have a meeting between Boris Johnson, the European Council President, and the European Commission President. So for the time being, there are a lot of there are rising odds regarding a no-deal Brexit this year. So the Brexit officials and the UK officials actually made it quite clear that they are not really keen to ask for an extension this month, and I'm not sure if that will change anytime soon. But yeah, so neither on the other side, European Commission and EC in Europe in general, and the European officials are like highlighted that they are not willing to do anything else for UK, so that UK is far away. So they have already done enough. So as I said, it doesn't really help a lot the pound. So UK and EU trade negotiations are in front of us. They will remain the main event of the week ahead. So that, along with the Bank of England, of course, rate statement and press conference, and Bank of Japan rate decision and press conference as well. So as I said, UK currency is very sensitive to risk of conditions, and for the time being remains under a lot of pressure. But let's shift to the MT4 and let's see what's going on in the market. So I've seen your questions. I will reply. We'll take back one step by step all the questions and reply to everything. Thank you for being here with us. It's Friday after all, so thank you for being here. So for those that they haven't already closed everything and went for the ahead of the weekend or something. So let me share my screen with you, and let's start with dollar index. This is the dollar index. Let me also hide this caption. Okay, perfect. So, okay, this is the daily chart for dollar index. Let's flip to the 1 hour chart. We have seen since yesterday afternoon and up to midnight, dollar index spiking higher, rebounded from 95.65. That was seen since FOMC meeting, top to just a breath below 97 level. And so far today in the European session, it turned lower, having, however, keeping a floor, a nice support close to pivot. And this is a key level to be watched, because it's not solely the pivot point of today's session, but also coincides with several fractals. So, and if I'm not mistaken, also, let me just go back to the, it's close to the midpoint of yesterday's performance. So that was a key support level to be seen for the intraday, for our intraday chart. So it managed to sustain a floor above it. Okay, so and it's moving above it since then. It's moving northward since then, sustaining some kind of a move above the 20-period moving average as well. It doesn't. The situation here is not quite clear. Even though we have seen this rebound, we've seen the asset sustaining a move above the 20-period moving average. However, it sustains. It's actually, for 3 consecutive sessions, it didn't manage to break that 96.70 territory. So you see, we have it's struggling to close above it, but momentum indicators are keep showing a positive outlook. So if you excuse me, I will use my Fibonacci. So it already managed to recover more than 50%, more than 61.8% of European sessions decline. So that actually turns the attention into the upside. Meanwhile, I have a crossover here of 5 fast moving average, 5 exponential moving average above 9. So that considered to be a positive signal, a bullish signal. So intraday, we can see that bulls are still in control, trying to boost the asset higher back to yesterday's highs, or if that breaks, we might see actually turning even higher. So for the time being, intraday picture remains positive. Daily picture, however, in the medium and long term outlook remains negative. We've seen a sharp decline the last 3 weeks. The asset remains well below the 20-day moving average, well below the key 97 level, and or even the 38.2 Fibonacci level, which stands at 97.30. So overall picture remains negative, while intraday picture has actually improved significantly. So that was on dollar index. We had actually ahead of us in 58 minutes time, just for you to be aware and to be a bit cautious. We have the Michigan sentiment. Okay, so let me just share it again with you, the calendar. So in front of us we have Michigan sentiment. So if so it's all about sentiment, right? It shows whether the consumers are like confident regarding the economy or not. So you can understand, you can see that it's with a red color. So you can understand that this is very important. So a reading either in line with the forecast or above forecast suggests that consumer sentiment is getting better and better. So this could actually support even further the dollar index and the dollar equities as well. But any reading below that, or even worse, below the previous like the last month's one, could put the dollar under pressure. So take care. This is the only data that we have from US, like in an hour. It's a bit empty day, as I said, other than the early UK data that we've seen earlier. So yeah, that should really you should turn your attention to that one. So that was on dollar. Slightly better improved, especially after trade price data. So I mentioned about the trade price data. So we've seen import prices were a bit firmer, export prices about in line with consensus, so that help further the dollar in the short time frame though. Okay, so trade price indices for May. Actually, even though they kept big declines over the last 3 months, they came slightly better than expected, with exports in line with expectations. So that was interpreted by the market as a positive reading. Okay, so what the market is like pricing in right now, or even expects for the June trade prices, is to show a rise. So trade prices should rise further in June, along with oil prices as well. So alongside the lift from a drop back in the value of the dollar, we have an ongoing headwind with demand destruction with global shutdown. So that's why we're expecting June trade prices to gain of around 1% for both imports and exports due to the rebound that we have seen in the oil price and the petroleum prices from April up to date. So yeah, even though the dollar has fallen from an April peak, this should also provide price support. So that's for you to be aware. So dollar, that we covered. I think we covered everything about dollar. I would like to cover dollar, the equity markets and the oil markets, but I will flip to your questions initially. So, okay. Let me share my screen with you. So, how far will pound dollar sell today? Let's check what's going on. So, okay. So actually, okay, we have seen this is the daily chart, guys. We have seen pound cable topped at 128 level. that 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 looks to be like a strong resistance level, because even though we had a nice rally for nearly the whole May, uh, as the market entered June, we've seen like doji candles, two consecutive doji candles on that should be on Tuesday and Wednesday. So that clearly states indecision, clearly states that bulls are like struggling to boost the assets further to the downside. And we had a sharp, full body candle yesterday, breaking the 200 moving average and returning and closing back below that. So the 200-day moving average is quite important. It's very, very important actually for cable, because it coincides with these two fractals over here and the double top that we have seen in more than 3 months now. So double top over here is a key level to be watched. So the fact that we have seen a closing yesterday below it, and we still see today pound moving further to the downside, could actually suggest that the market reverse. So, however, today's closing will be significant. So, if we see like a decisive move further to the downside, could actually suggest that the asset is not just correcting the market, but it actually could actually suggest a reversal to the overall sentiment, but we haven't get a confirmation, so we need to see how it will end the day. So intraday now, okay, we've seen a rebound from 125.40 levels up to 126.42, reaching the 200 period moving average in this 1 hour chart, and quickly turning back down again. So the asset clearly, let me get clearly struggled to boost further to the upside and quickly turn back down again. So let me get rid of the rectangle because it confused me slightly. Okay, close that. So you ask how far will pound dollar sell today. Let me put also the pivots on. So that's interesting. Can you see that? So it boosted, it moved, like we had a sharp sell-off yesterday night, right? So we actually retested the first support of the day at the 24.50 something, 125.40, but it found immediate support and it kicked back down, back to the upside again. Kicked, however, pivot point. So we have seen that the asset remains the whole day below its pivot, so that strengthens the negative outlook, along with the fact that RSI turned back below 50. Just we found the exact, so that happened like, yeah, it was like nearly 3 to 4 hours ago. Turned significantly lower, crossed below 20 period moving average, quite a decisive candles, both of them. RSI remains below 50, but more precisely, it keep looking to the south side, so it doesn't looks neutral. It's keep pointing to the downside. MACD remains negative, even though we had a bit of an increase, but remains below neutral zone. Let's have a look on my tight fast stochastic, turn negative, keep extending to the downside. There is further steam to the downside. There is further area to be covered. And let me also use my fast template and the 5 and 9 exponential moving average, which interestingly we've seen a bearish crossover here. So the 5, which is with a green color, crossed below the 9 exponential moving average. So that suggests that in the near term future, so the next few hours, we have a lot of bearish sentiment. So bears are still there and they are still boosting the asset further to the downside. So support could be clearly back to the first support of the day, which coincides with the lower Bollingers. So support level is that one. If the asset today breaks that level and close below it in this 1 hour chart, so we might see further decline down to the mid area between first support and second support, which is also the round 125 level. But I'm highlighting that if and only if it breaks the first support of the day and close below that. So if it breaks that level, the next level to be watched will be the 125 level. It's the mid level between first support and second support of the day, and it also coincides with the low that we have seen in the 4th of June, at 4th of June. Okay, so that was on pound. Hopefully I replied to your questions. Let's move on to the next question. Very well, thank you, my dear Riley. Hope you're doing great as well. Thank you for your kind words, Joshua. So, dollar yen from Ali. Okay, dollar yen will be on 110 soon. Okay, let's see what's going on. Okay, so 110, really? That's a long way up, my dear Ali. So, for the time being, since you mentioned 110, I will start with daily chart, okay? Let me clear a bit the... okay, let me get rid of pivots so it will be clear. So this is the daily chart, okay? We've seen the asset moving in ranking market since late May. So it entered a bit of a consolidation mode, bouncing between 109.50 and 106 level. So in the long term remains neutral. Now, if we go closer to the medium term, we have seen a sharp decline lower, but so like 3 consecutive bearish candles, full body ones. But yesterday it managed to put a floor on this decline, and that's why it closed a bit dodgily, small body candle, suggesting that we might see a reversal. It moved further to the upside so far today, quite positive. So yen looks to changing to have some losses against dollar, but after all, don't forget that it still remains below 20-day moving average, okay? 50-day moving average as well. So and let me put also the Fibonacci's on. So we haven't really seen it reversing a lot of the losses that we have seen since last week. So yeah, we cannot really tell that the medium-term outlook, the daily outlook, has turned into a positive one yet. Today's close will be significant, but definitely we need to see a close above 50-day moving average at least. So you see that it's moving well below. It's moving below its 50 and 20-day moving average. So yeah, it remains weak. So let's see what's going on in the 1 hour chart. It got improved, and that, as I explained, that is mainly has to do with the worries regarding the second wave, because we've seen actually California having a spike in the new cases. We have seen Arizona, New Mexico, Utah also searching in new cases of COVID. So all these have actually spread a lot of concerns regarding the second wave. So on the other side, we haven't really seen any positive news in regards to the vaccine, in regards to an effective treatment of the COVID. So the rate that suggests that we'll see contracting rate of new infection or exponentially increasing the rate of new infection remains below 1. So what that means is that there is if we compare new cases with deaths with all cases as well, so we have a contracting rate in regards to the COVID. So all these spread actually concerns for investors. That's why we've seen stock markets drifting lower, dollar spiking higher, and yen spiking higher due to the safe haven demand. So dollar has found a floor, is doing quite better because of the safe haven demand, nothing else. Okay, so why is that? Because that could potentially brings a lockdown, another lockdown. This suggests actually that the recovery is like it will be delayed. The recovery of the economy will be delayed. And that's why they are not encouraging news in regards to the economy. So this is why we've seen this shift in the sentiment because of the fear that a potential second wave could potentially brings lockdown again, or and could actually delay recovery of the global economy, and that as a consequence could actually decrease demand for energy market, for oil, because there won't be a lot of demand, so that could drift oil further to the downside. So dollar yen bounced above 106.50, kicked the 107.65, but it found a ceiling, as it seems, at least in the intraday picture. So it moved higher. But it didn't manage to recover a lot of gains in comparison with the decline that we have seen since last Friday. Okay, however, the next levels to be watched, however, as I said, so it's like it already retested once the first support of the day, the second resistance of the day, but it sustains a floor above the first resistance of the day. So it's a bit neutral for the time being, but any move above the 107.53 could suggest further into the upside with the possibility of retesting 107.80 or 108 level, while any break of 107.720 could suggest that it will get back to yesterday's losses. So keep an eye on the fast EMAs. For the time being, they look neutral. They move sideways, so that suggests neutral picture for euro dollar. But as I said, resistance can be found on 107.50 and support at 107.20. So yeah, that's for dollar yen. Stochastics turn lower, but you can see that it's like sustaining a floor above 107.18, so and that candle suggests indecision. So it's a long tail, but with a small body. So the indecision after a decline is the very first sign that we might see a reversal, but there is no confirmation yet. So yeah, we need to see at least like a nice, quite significant bullish body in order to suggest that it would turn back to the upside again. That was on dollar yen. Hopefully I replied to your question, my dear Ali. So next, share weekly analysis for gold. Okay, let's flip to gold. Nice. Okay, where is gold? Here it is. So let's start with the daily picture on. It's something that I'm keep repeating for gold. Okay, and what I'm keep repeating is the fact is that you need to have in mind, especially for those that they are looking at daily pictures or weekly pictures, that the 200-day moving average, okay, and and the trend line that we had, like that, we have that the trend line of the rising wedge that we have seen like for the whole April and May. So it's a key levels to be watched. So which one is that level? Is the 1710. Okay, that's a key level to watch, 1710 and the round 17 number. So that this is the areas that you should focus on. So the trend line of this rising wedge coincides with the 200-day moving average, and nonetheless is also above the 1700s level. So that's a key level to be watched, and right now it's our support level, so a key support level, which if it sustains, with the assets actually sustaining a move above it for 1, 2, 3, 4 consecutive days, and nonetheless it sustains a move above 20-day moving average for 2 days in a row. So a move and a close actually close today above this level, or even better, a break of Thursday's high at 1740 could strengthen even better the overall bullish outlook for gold. So the asset actually, after rebounding on Monday away from 1670 territory, it had some nice performance with nearly full body candles, sustaining small negative one, but sustaining a move above 20 and above 200-day moving average. So it remains positive, even though it's a bit, the MACD is a bit close to zero, but nonetheless, as I said, it sustains a move above 12 years highs. So within 12 years highs, more precisely, sorry. So the overall outlook, the long-term outlook, since you are asking for a weekly analysis, it remains positive. Let me shift to the weekly candle so you can see that happening. So can you see that? So I will clear everything. Some kind of a twisted bottom over here in this weekly chart, okay? But if I zoom out, you can see that it sustains a move. It sustains the gains that we have seen 12 years ago. So the overall outlook, the weekly outlook, if you prefer, remains positive for gold. So, sorry, that's weekly chart. So, how it will close the day and the week is quite important, because if you close it like that, like bullish candle reversing all the losses that we have seen since that we've seen last week, then that strengthens the overall bullish outlook for gold. Okay, you can see that it's been to the upside since like July 18. Some corrections, but sustaining a move above 200 week moving average. Up, correction, up, correction, up. A slight correction, but nicely above the 20, above the 200 moving average, and nonetheless, it sustains a move above the 17 and the 1670 territory for 1, 2, 3, 4, 5, 6, 7 consecutive weeks in a row. So keep an eye on how it will end the week. So for the time being, everything points to the upside, as it managed to reverse nearly 70, more than 70% actually of nearly 1 month's decline. It managed to reverse. It could find significant significant resistance at 1740. So we need to wait and see how it will end the session. But so far remains positive. So yeah, that was on gold. Let's have a look. Yeah, struggling intraday to break the 1740, but yeah, it keep posting higher lows and higher highs, so that strengthens the positive outlook for gold. Let's have a look at intraday of what's going on in the 1 hour chart. A bit of a rounding bottom over here, but hasn't really confirmed yet. It will be confirmed once it like breaks this twisted top. Okay, a bit of a decision intraday. So we need further confirmation, but a bit of a decision. Yeah, it needs to have a nice close about 1740 in order to suggest that it will retest the 1744. It's a bit neutral, yeah, but positive to neutral. RSI flat, suggesting consolidation, but remains above 50, so that suggests that it's still positive. MACD is strengthened to the upside, stochastic flat as well, so yeah, consolidation follows. Okay. Pound a cable, we've already seen that 122. You're saying we have covered pound though. We have covered pound, so that's the long term, as I assume. The 122 is far away still, but a break anytime today or at least next week below the 38.2 Fibonacci level, so that's around 125.30, sorry, but even better would be at the round 125. So close any time today or at least next week below 125 level could bring back to our attention not 122 yet, but definitely like the 50 and 61 Fibonacci level, 61.8 Fibonacci level. So 61.8 is down to 123.50, coinciding with this 2 weeks resistance over here. So yeah, a close below 125 could bring back to our attention the 123.50 level. Of course, if it moves further to the downside and we'll see some daily decisive candles, then yeah, 122 could bring back to our attention. But for the time being, this is not the case. Pound Swiss. Okay, Swiss, it was very interesting the last few days and weeks actually. Let me find pound Swiss. Pound Swiss. Let me pound Swiss. Here we are. Swiss had a very gain a lot this week against every single currency. So it is on gain against every single currency and pound as well, against pound as well. So that's the daily chart. I struggle to let me put a trending line over here connecting the highs and the fractals. So it struggled to break the 122.80 level. So it turned quickly lower, indecision, negative candle. So can you see this pattern? Up, bullish, strong bullish candle. Indecision followed the next day, and the very next it turned down and actually reverting more than 50%, actually more than 60% of the gains that we have seen the previous 2 days. So that was a clear reversal signal back in Tuesday. So up, indecision, lower. That is an an evening start formation, guys, just for you to know. Okay, this is an evening start formation, so rising trend in a bullish candle, indecision, decline with more than 50% losses. So that was an evening start, clearly suggesting a negative the reversal to the downside, and it's a bearish signal, as I mentioned. So for now, let's see what's going on. It continued moving lower, breaking yesterday and closing decisively below the 20-day moving average, okay, but sustaining a floor so far today up close to the lows that we have seen yesterday, 118.40. So that's it sustains actually. It sustains a move within this ranking market that we have seen since end of March, but those candles, the Tuesday, Wednesday, and Thursday's candles were quite strong ones, closing below 20 and 50. So a move, actually, if the asset closed today below its 20-day moving average, so below the 119.50 level, then that could suggest that there is further steam to the downside, and the attention will be back to the to 1 month lows and the lower Bollinger Band line at 117.20. So let's see what's going on intraday. Turn lower. Okay, retesting right now the 20-period moving average. Pivot over here below pivot. RSI turned below 50. MACD remains negative. So this looks to be just a correction. This rally looks to be just a correction before getting back down again. So the overall picture remains negative. Let me have also my stochastics on. Sharp decline. There is further steam to the downside. Okay, wrong. So bam, up, down, turn lower. So yeah, for the time being, the intraday picture remains to the downside, as MACD remains negative, RSI is below 50, and stochastic looks to have further steam to the downside. Let's have a look on the 5 and 9 exponential moving average. They haven't crossed, so they are a bit sideways, but if we see a cross of 5 below 9, then that could trigger our attention further to the downside, with next support to be seen at this latest fractal on the 118.50. So let's wait and see. I'm going to go short for gold. Please let me know as the right time. I'm afraid I cannot do that, my dear Waji. I have already done the analysis, so I'm already done the analysis. Hopefully I help you, but I cannot really tell you what to do. Okay, just take care. Risk management, money management matters. So if you're keen to open a position ahead of the weekend, make sure that you have done an appropriate risk and money management, setting your stop loss at a reasonable level, setting your target at a reasonable level, and your position size as well. So take care. I'm not sure what you can't believe, Taju. So, okay. Hello, everyone. Thank you for your nice comments. We have covered Cable, Oman, Aussie. Someone asked for Aussie. Oh, you asked for Aussie. So let's flip to Aussie. Just to let you know that we are facing a lot of pressure today on the commodity currencies, so all oil correlated currencies. So that has to do, as I said, on the fears of a second wave, on the decline of oil. Okay, that's why I've seen commodities under pressure, and in general, the losses have been driven on the risk of conditions. Okay, risk of conditions. So that doesn't really change though the overall picture of the market. I mean the long-term picture. Okay, so let's see what's going on with Aussie. Okay, so Aussie, first of all, nice rally for more than 2 months. It remains above 20-day moving average. Okay, and that's crucial because if it rebounds from this 20-day moving average today or like next week, that could suggest the continuation of this trend to the upside. Okay, 20-day moving average is at 0.6750. Okay, so the overall picture, medium-term picture, daily, weekly remains positive. So yeah, remains above the 20-day moving average. Momentum indicators are positively configured. RSI remains for like more than a month above 50. MACD is positive for over 2 months. So yeah, medium-term picture remains positive. That's why a bounce away from the 20-day moving average could actually suggest that the rally will continue. However, let's see what's going on intraday. So we've seen that the assets rebounded from 0.6793. Okay, so dollar against Aussie remains under pressure. A nice intraday short-term support at 0.6870. So if you see that, so for 4 consecutive hours, so ahead of a US session and as the US session opened, the assets managed to sustain and move above 0.6870. Sorry. So indecision. So what you should really take care for now is that any move and break and closure of the 1 hour candle above 0.69 could suggest further steam to the upside with potential target at 0.6958, while a move below 68.70 could actually bring yesterday's bottom back to our attention. Okay, so yeah, for the time being, it remains neutral, so not clear. You can't really take a decision based on this 1 hour chart and the ranking market that we're seeing between 0.6870 and 0.69. So let's wait and see whether we'll break this latest fractal at 0.69 round number or whether it will move back down again. But it's definitely holding a floor right now for 4 consecutive hours. RSI neutral, MACD neutral. So yeah, you need to be a bit patient on that one. Unless if you're a very short time frame trader and you're like thinking to take a decision based on 30 minutes chart or 15 minutes chart. So yeah, that's in the for Aussie. Let me check your questions. I'm not sure what that means, my dear Jose. Can you translate it for me, please? Hi. I see the Nasdaq is Nasdaq, right? Cool. Good question, because I really wanted to cover equities, US equities today. So Nasdaq is doing great. In June, it hit record highs twice, actually not 1, 2, 3 times this week. So yeah, so that's the daily picture. So we've seen a V-shape recovery for Nasdaq, posting record highs this week, but reverting yesterday just in a single day. 1, 2, 3, 4, 5, 6 consecutive days gains, so it reverted quickly lower, but nonetheless it sustains a move above 20-day moving average, above 50 and above 200. So the overall sentiment remains bullish. You can see MACD steady to the upside, well above zero. RSI steady to the upside, above 50 since mid of March. So the overall picture remains positive, and more precisely, okay, if I put a Fibonacci level in yesterday's losses, okay, over here down to here, so that's my daily candle, Thursday's candle, and I will just quickly shift back to the 1 hour chart. You can see that it already reversed more than 40% of the losses that we have seen yesterday. So a close today above the midpoint of yesterday's losses. So that should be around 98.50 level. Okay, 98.50. A close today above 98.50 could turn the attention back to the upside with a potential return back to the record highs and the 10,150 level. If he closed today above 98.45 level. So you mentioned 200-day moving average. So I see Nasdaq is testing the 200 moving average. It is not testing the 200-day moving average, my dear Paisho. It retested earlier the 20-day moving average, but it rebounded above it. I'm not sure what you're seeing. Maybe you're in the 1 hour chart. This is the 1 hour chart. This is the 200-day moving average, 200 period moving average in the 1 hour chart. So yeah, it broke higher, so that's positive. So intraday picture has turned positive. It actually broke on the European session the 20 period moving average in the 1 hour chart. It broke that latest fractal in the 200 period moving average and is ready to close outside Bollingers. So positive outlook intraday. And RSI, nonetheless, in the 1 hour chart is a cross above 50. So intraday positive. If of course we see this candle in 15 minutes time to like close so significantly like it is right now. Yeah, but yeah, intraday picture remains positive, looks positive, looks that the bulls are in control. Intraday so long-term picture remains well positive. Yeah, that's it on Nasdaq. Nothing to add on that one. We've covered gold. S&P 500, nice. Okay, let's flip to S&P 500 in the USA. Similar picture with Nasdaq. Reverse more than 38%, like nearly 38.2% of the losses that we have seen yesterday. So that changes the intraday picture into a positive one. We need to wait like another 15 minutes for that candle to close in order to see whether it will close above 38.2. But yeah, the sentiment has turned to positive. RSI is to the upside. MACD decreases and is like it could be seen in the near term future, like in a few hours, to cross and turn into a positive territory. RSI to the upside as well. It's above its pivot. So a close above 38.2, like at the top of the hour, would suggest further steam to the upside. Yeah, so parabolic SARS is also below the price, so that suggests further steam to the upside. So positive S&P for the 1 hour chart, while the daily chart is a bit tricky, to be honest. So the daily chart is very, very close to the 20-day moving average. So support level could be seen at 3,000, round number, and resistance level could be at the mid of yesterday's candle. So it should be around 3090, or even more precisely 3000. So for those interested for like medium term, I mean, how we will end how it could no, actually, how is the daily chart and the long-term picture, and move below 3,000. That's a key level to be watched. 3,000 is a round number. It's a key psychological level. It's below 200-day moving average, and it's below 20-day moving average. So a move below that, and a close below, or even actually a close below, yes, a move below 3,000 could turn the overall outlook for the asset. Could reverse the overall outlook for the asset, so it could bring about to our attention the 28 level. But on the other side, if it sustains its gains, or even if it breaks and closes today or by Monday, or on or any time like on Sunday, Monday, above 31, then it could suggest furthest into the upside. So that's the key levels to be watched ahead of the weekend and on Monday as well. Intraday, turn to the upside, is above pivot, so remains positive. VIX and dollar index, we've seen dollar index sustain a nice floor, so about pivot, but struggling to break the 200 period, struggling to break the 97 level, so it's a bit neutral. We need to see, in order to believe that it will move further to the upside, we need to see a break of 97 level, or for a move lower, we need to see a break below 96.50. I'm afraid I don't have VIX over here. I don't have the volatility index. Let me double check. I think it's the type of my account. Yeah, I'm afraid I don't have VIX over here, my dear Darabi. Okay, I'm sorry for that. Yeah, no. Something that you should have in mind regarding VIX and equity market, like, and more precisely S&P 500, is that they have negative correlation. So what I mean by negative correlation, if VIX, let's say, turns to the upside, then S&P 500 is expected to move to the downside. If VIX turns to the downside, then S&P 500 expected to move to the upside. So negative correlation. So they tend to move to the opposite direction. Okay, just something that you should have in mind. I'm referring to S&P 500 and VIX. Oil, last but not least, would be oil. And if you have anything else to ask, let me know, because I will end the session. So oil saw significant losses this week. It rejected the 40, 60 territory, turned lower, more than 50% declines on oil. I already explained the reason. Okay, drifted lower, back to 34, 30 level. It tried to rebound so far today, but remains below its pivot point of the day, which is the 36.80 territory. So it doesn't look that there is further steam to the upside. Okay, so there is a lot of risk taking. There is a lot of it seems that there is a lot of pressure on oil. We had also some Canadian data out, the Canadian capacity Canadian capacity rate, which fell significantly for the first quarter of let me bring back my chart. So hi again. So as I was saying, we had some data out of Canada earlier. So we had the Canadian capacity rate, which fell significantly, and it fell down to 79.8% for the first quarter of the year, below the last quarter of 2019. So that decline in the capacity rate was mainly driven by the business shutdown, due to the lockdown, and that actually put back the manufacturing capacity use. That's why we've seen this decline, but it was a notable um, um, capacity rate, especially in the mining. Okay, so so um, so so that could that's something that that was driven by the oil and gas capacity slipping to 81.5 from 81.8. I mean, I'm referring to the breakout of this report. What is expected right now is that we might see further growth in this ratio for the remaining of 2020 as the incomes stagnate amid the shattering of the economy and the slow recovery. So this is something that this report actually eased a bit the dollar cut. So let me show you dollar cut and oil before I end the session. So there is another question. Okay, I will go through that. So as I was telling you, that eased a bit the dollar cut. So we have seen dollar cut is back from overnight. So this is Okay, dollar cut is back from overnight 2 weeks highs of 136.30, remains to the lower area at 135.60. Partially the recovery of the partial recovery, the very short intraday recovery of oil. You see that? Today's recovery, slight recovery of US oil, is something that supported slightly the Canadian dollar. That's why in the US session so far we've seen a bit of a reversal to the downside, supported slightly the Canadian dollar. But it looks like there is a limited upside potential for Canadian dollar. So risk-taking levels have been rebounded today from Thursday's decline. Let's wait and see. However, the incline for today, at least for Friday's session, looks a bit limited to the upside. So it remains below 20 period moving average, the 136 level round number. So yeah, that's why we said that intraday upside movement remains a bit limited. So let's have a look on the 30 minutes chart. Rejected 136 and turned back down again. So yeah, we might see a reversal after all and gain the Canadian dollar to gain again. But yeah, we need actually a confirmation. So immediate support could be found on 135.30 for the intraday picture, while a move back below 135 today or on Monday could open the doors further to the downside for dollar CAD in the daily picture. Like I could open the doors down to 133 or even 122 territory. So let's wait and see. I think I covered everything, hopefully. Let me see whether you have any final questions. What's the overview on Asia currencies? Shall we expect strength on any of these in the near future? So you mentioned Asia currencies, so yen, Aussie, Kiwi. Aussie neutral intraday. As I said, stuck within this barrier. So any break above 0.69 could bring furthest into the upside, could suggest furthest into the upside in the 1 hour chart. Any break of 0.6870 could open the doors further to the downside, with support could be found at 0.6825 or 0.68 round number. That's intraday. Let's flip to Kiwi, similar picture, boosted above pivot, turned back below pivot in the last 4 hours, but it sustains a nice floor over here. So yeah, it sustains a floor, so that's quite positive, but a move below that, below 60.40, could open the doors down to yesterday's lows, while if we see a close over here, so above sorry, a close or a move, a close of the 1 hour chart above 0.6465, then that could suggest further steam to the upside for today, for the time being. That was on Kiwi. Yen, steady, sustaining a floor above the first resistance of the day, so it's positive. If you use like fast MAs, could help you with your analysis. But yeah, all of them, all three of them are neutral in the 1 hour chart. So we need to wait and see for any break of their support or resistance level, their immediate support and resistance level, in the very, very short time frame, of course. Okay. Yeah. So any other questions, guys? Any other questions before I end the session? So, okay, I will give you some time, and I will just mention that just to summarize a bit what's going on. So let me show you our traders board. Okay, just to see the overall sentiment for now. So hopefully you can see it. So as you can see, dollar is a bit mixed, gaining against commodity currencies like Aussie, New Zealand, and CAD, but yen as a safe haven benefits. So dollar is like on beat against commodity currencies, as I said, but the biggest, so it's a bit mixed. If you see, that's the overnight change. So for the time being, dollar actually is a bit mixed, gaining against Aussie, New Zealand, and CAD. Losing against Aussie, New Zealand, and CAD, losing by gaining against yen. Yen is one of the biggest losers so far today. Aussie, one of the biggest gainers so far today. Canadian dollar is also doing great. So yeah, that's the overall sentiment in the currencies. So let me get back to me. Hi, it's over here. So oil under pressure. Equity markets have rebounded, but have taken back one third of the hefty declines that we have seen yesterday. So they remain under pressure. So we need to see further steam to the upside in order to suggest that they will continue their upside. So equity markets a bit hefty, dollar mixed, oil under pressure, gold positive, euro steady, pound under pressure. So that's the overall sentiment, just for you to be aware of. So take care. We have Michigan. Oh, Michigan is already out actually. So above expectations. So that should help. That should help dollar index. We haven't seen a reaction right now, so let's wait and see. So Michigan is expected to support in the very near term picture the dollar index, because it came above expectations. So yeah, let's wait and see, as I mentioned. So I need to finish the session. Thank you very, very much for attending. Hope you're having a great weekend ahead. Take care, and I'll see you again next week, Monday. See you. Thank you for attending. Bye bye. Take care.